Welcome back. Gautam Duggad joining us now, Head of Research at Motilal Oswal Securities. Gautam, good morning. Firstly, how would you sum up the earnings season gone by? Because largely, of course, we saw the impact of the tax cut, but revenues have still been muted. Were there specific, highlights that stood out to you? Other than that, how would you overall sum up the earnings season?
Hi, good morning. I think the earnings season was in line, but the expectations were very muted to begin with. So those modest expectations were met on an operational front. The headline numbers at the profit level obviously are better than expectations because of the tax cuts. But if you see EBITDA and PBT for Nifty, the EBITDA growth for Nifty is 2% and PBT has declined by 3% for Nifty. Sales have declined by 2%. So I think the sales decline is the first after June 2016, and EBITDA growth of 2% is also the lowest in last 9 quarters. And PBT, as I said, has just declined 3%. So clearly on an operational front, the numbers were quite weak, but just that these were backed into the expectations, which is why you've not seen much of a market reaction. In fact, if you slice the numbers a little bit more, you will find that the Nifty PBT X of the 3 corporate banks has actually declined by 11%. But again, that was baked into the expectations. One good thing which has happened is the lower tax rates have stemmed the earnings downgrade. So for us, in this quarter, there has been no downgrade in the Nifty EPS for FY20. It's stable at around 538 rupees, which is the level which we went into the quarter with. So no change in EPS estimate because of the tax benefits which have happened. But aside of that, operationally, the numbers were pretty weak. On a PBT front, if you look at the 19 sectors that we track, except auto and utilities, none of the sectors have beaten PBT expectations. Large sectors like consumer, technology, private banks, NBFC obviously were in line. But I must also add that some of the commodity sectors, metals, oil and gas, have actually dragged the aggregates big time this quarter. And autos obviously on a very, very low expectations managed to beat that. So that's how I will summarize this quarter. In line, meets the modest expectations, but doesn't herald a big earnings recovery going forward.
Okay. Now let's boil it down to specifics. In terms of the revenue growth, Gautam, it was quite flat. You did see the overall tax cut advantage playing out in Q2. Do you think that with certain factors going into the coming quarters, say the festive season, the overall monsoon, that we could see a better print when it comes to the profits for India Inc.?
As far as our profit expectations are concerned, we are expecting around 12% Nifty EPS growth for FY20. If you see the first half, the EPS or rather the profit growth is 6%. So clearly there are expectations of some pickup built in for second half, and obviously the base is also favorable for some of the sectors going into the second half. As far as revenue is concerned, that's more a function of demand revival, if any. Right now, if you go by the management commentaries across the sectors, none of the sector has come out and clearly said that things are improving or things have bottomed out. Most of them are sounding a bit ambivalent, saying that things are bottoming out but not sure whether the recovery will be there in third quarter, fourth quarter. Best one can say is that there is a probability of a gradual recovery ahead. But as of now, if you read the tea leaves, if you see the high frequency data which is coming out, the GDP growth data, IIP, auto fuel consumption, most of those data points are pointing towards a well entrenched demand slowdown which is set in. Obviously government and RBI have taken some steps, but we think that it will take some time for those steps to percolate and reflect in numbers going forward. So I would still think on balance the probability of earnings downgrade is still higher than upgrades, and this quarter we've been saved the embarrassment of earnings downgrade because of the tax cuts.
Okay, so going ahead now, what are you focusing on? If consumption is meant to be a theme, do you see perhaps, some of those pockets doing better in the following quarter? And not only just perhaps FMCG, but auto. What are some of your views on that lot, Gautam?
Yeah, we are positive on financials because that remains the driving force of the earnings growth to whatever extent that we are seeing. So for example, for FY20, if you look at our numbers for Nifty, we're expecting 12% earnings growth. Roughly 95% of that earnings, incremental earnings for FY20 is coming from financials. So financials, if you remove rest of the Nifty, is showing 0% earnings growth. So financials clearly remain the focus area, and obviously with the judgment that came last week from Supreme Court on IBC related processes, it does provide a shot in the arm for a lot of the corporate banks. In fact, for the quarter itself, we have seen corporate banks delivering reasonably good performance versus expectations. The second pocket that we are focused on is in consumption, because consumption right now is going through a bit of a bump because of the overall growth slowdown. But I think this offers a pretty good opportunity for somebody who has missed buying into consumption stocks. They are now going to stay sideways for some time, in my view, given the way valuations are stacked up for many of these names on a 1 year forward basis. But anybody who has a view which is longer than 1 year must use this opportunity of a sideways movement in a lot of consumer stocks to add on to it.
Gautam, let's get in the hits and the misses by way of stocks in Q2.
Yeah. So, like I said, in financials and corporate banks, we've seen reasonably strong performance coming in from SBI or ICICI on a whole lot of front. Then Asian Paint has been a reasonably strong bit on profit. But I must also add that a lot of the beat that you've seen in Nifty companies for the quarter is also happening because of the tax cut that has happened. On the PBD front, if you were to analyze, then the beat is not as strong as it is on the PAT front. As far as the misses are concerned, cement has been a miss, despite the absolute numbers being reasonably strong, but the expectations were quite high. So Ultratech has been a miss. We have seen a beat on operational numbers from Bharti Airtel also, even though the sector remains involved in a lot of other factors which are beyond fundamentals at the moment. So those are some of the sectors and stocks where there have been clear-cut hits and misses.
All right, we'll let you go on that note. Thanks much for joining in, giving us the hits and misses, and really summing up how the Q2 earnings has shaped up the outlook as well going forward.